That note for today. Thank you very much for joining in. Good to get that perspective on the market with you. Thanks for that. Thank you. Well, let's move on to a corporate conversation now, and it's an interesting one. We're putting the spotlight on PVR Inox. The company has been, of course, talking to us about its plans of expanding in the south of India in a big way. It's looking at expanding its base in Telangana, for instance. More screens are coming up over there. Sanjeev Kumar Bijli, who's the executive director at PVR Inox, is joining in to talk about this look south strategy, so to speak, at PVR Inox. Sanjeev, great to have you on. Thank you so much for joining in. So, we've been discussing this over several quarters with Ajay. I remember those conversations where clearly South is emerging as a big market. That's where you're going. You're also trying to keep it asset light with the FOCO model, right? The franchise-owned, company-operated model. So just tell us once again, the numbers, how they're stacking up for South. What justifies the Go South approach? I mean, in the last 1 year, have you seen average occupancies higher in your southern screens? Why are you looking at South India? Is content better? What's driving you there?
No, clearly, I think the occupancies are much higher there. I think people go to the movies a lot more often. The culture to go and entertain yourself at the cinemas is much stronger. So that's why we've been focusing on the South a lot. In Karnataka, Tamil Nadu, Kerala, and also Telangana, we're actually focusing a lot, not just on the main cities, the big cities, but also the smaller cities.
Numbers to that effect, Sanjeev? I mean, what would say, average occupancies, I think most quarters that we talk are ranging between the early 20s to mid 20s. But what are occupancies like in the South? And I'm not asking, as of this month per se, the latest numbers or Q4 numbers, just so that we understand the difference.
Average occupancies are hovering around 30%. So that's what it is in all these southern states. And, the number of movies that come out also in South are very prolific. The quality of films is actually getting better and better. So that is what driving the people to the cinemas in South India, and our focus on South India, amongst the rest of India as well, of course. But on South India always remains very strong.
So 30% plus occupancy in South versus an average of 23-25% pan-India. That would be correct?
That's right. That's right.
So Sanjeev, how many screens do you have in south of India today versus your overall screen count? And how will that change going ahead with this targeted expansion down south?
Well, we have around 1,761 screens now, all India. 40% of that is in the south. And going forward, every year we're adding about 100 screens. This year we've opened about 20 screens so far, and we're going to be opening another 82 screens till the end of the financial year. Out of the 100 screens, again, about 40% will be in South India.
So as a percentage, 40% exposure to South remains, simply put?
Yes.
That number is not going to change?
Absolutely, yeah. There's a lot of potential there. There's a lot of, places where new malls are coming up, new opportunities are coming up for us, and some great developments are coming up. So our focus and our growth strategy in South, of course, remains very robust.
Okay, Sanjeev, so just come in on the capex and the funding, because again, the whole approach has been asset light.
Yes.
So as you go about opening these 100 screens, how much money will PVR Inox have to put in? And how much, I don't know how the franchise model works. How much do you need to put in? How much comes in from the franchisee?
Actually, there are two kinds of models that we're pursuing. One is asset light, where about 50% of the capex, up to 50% of the capex is actually contributed by the developer. And then we also have a FOCO model where 100% of the capex is contributed by the developer. So roughly on 100 screens, if our capex without this model, if we were supposed to invest entirely in the fit outs of the cinema, which we used to do, the capex would be anything from 300 to 350 crores. But now it's actually half. It stands at around 175 to 200 crores.
Hi, Sanjeev. Good to see you, Ben. This is Nigel on this side. It's been a while since we spoke.
Hi.
I just want to ask you, what's the margin difference between the two?
The margin difference, when it comes to FOCO, actually is purely on revenue share.
Okay.
But as far as asset light is concerned, asset light is actually also taken on lease, but a very low MG. So we still basically retain the revenues, the total revenues, and do a revenue share with the developer. this is a fairly new model, and we're obviously yet to see the proof as we go along.
Yeah, so what's the profitability though? Profitability difference between the two?
Obviously, the FOCO model will be much higher because it's only purely on revenue share. And as far as, we have zero investment and purely on revenue share only. But as far as the asset light is concerned, we can expect, EBITDA margin, depending upon the location also. It's not just one sort of like margin that we're looking at, but anything between 18 to 20% could be the margin.
And you gave us a number as well in terms of the investment that would be required from PVR side. Can you just repeat that number?
As I said, the total investment for 100 screens would take about 300 to 350 crores.
Got it.
Since this is a combination of FOCO and asset light, we'd be looking at 175 to 200 crores.
Got it.
How has this quarter been, Sanjeev? Since we have you, we've had a few good movies, which has got people back to the theaters. Whether it's Mission Impossible, Sitare Zameen Par. How has Q1 been?
Much better than Q1 last year, and much better than Q4 also. I think we'll probably end up clocking about 33.5 million people this quarter. We're very happy with the numbers we've reported. Managed to get a good number of footfalls at a decent ticket price and a very decent F&B number as well.
And how would this 33.5 million number in terms of footfalls for Q1 just compare with Q1 of last year or Q4, just to get an idea of the improvement?
I think Q1 last year was just about 30 million. So it's
okay. So that's about a 10% increase.
10% increase, yes.
In terms of, you've given us the occupancy level. In terms of what we can expect from the F&B spends, the entertainment side of it, right, which is also simultaneously, apart from cinema exhibition, that's also something that you've been pushing. What are early trends suggesting for Q1?
Again, much better. The F&B spend is measured by SPH, which is the spend per head. We've gone above on our spend per head from the last quarter. And even the same quarter from previous year. So there seems to be a 10 to 12% increase in spending as well on F&B.
Okay, so F&B spends also going up. Just overall, Sanjeev, leave us with the updated levels in terms of cash and debt. You've already told us that in this capex rollout, your share is only up to about 175 crores.
Yeah.
What is the plan for the rest of the year in terms of any other investments? And just an update on the cash levels and the debt position.
No, I think maximum it'll be about 200 crores towards these new projects, maybe about 50, 60 crores towards renovations and repair and maintenance of the existing circuit, because, there are some properties which are very old now and need some kind of rejuvenation, capex, about 50, 60 crores. So we're obviously keeping an eye on the debt, and we'll be able to pare down our debt further, hopefully by another 200 crores this year.
Okay, all right, Sanjeev, thanks a lot for joining in and giving us your take. There have been a few big hits in the past quarter, and you're sounding confident about things going ahead. But let's cut across